Joining us to discuss performance and outlook for global financial markets and the commodities market, we have Babajide Atolagbe, Treasury Analyst at AfriInvest Asset Management, joining us on the program. Good morning.
Hi, good morning, Ladi. Thanks for having me.
Great to have you. Well, the global commodities market have remained volatile. What would you say drove sentiment in the oil market? We've seen that seesaw movement week after week. What happened in the market this week?
This week, you're very right. The market has been neither here or there. We've seen a mixed sentiment, right? And on the bull side, we've seen that the improvements in the lockdown situation in China has prompted some sort of nice sentiment in the market, because we all know China's position in terms of global oil import. So lately, China has gone into a lockdown to control the outbreak of COVID-19 challenge that you are currently facing. Just last week, we saw new data from the Chinese government that they had little or no cases recorded in the week, and they are looking at reopening some key cities, right, to continue to improve economic activities. So that sentiment has brought about investors, oil traders wanting to buy and wanting to speculate longer. And on the flip side, right, the Russia-Ukraine crisis continues to dampen sentiment. It's really a tussle in that space, as global leaders are beginning to look for ways to actually sort out the supply imbalance that was brought about by the war. At the early part of this week, we saw that the U.S. government entered into discussion with the Venezuela government to see how they could bring back Venezuela oil into the market. And we all know the reason why the U.S. is trying to do this. They are trying to do this in order to put a balance to the oil market and to allow oil prices to fluctuate. So it's really been a difficult week for oil traders. We've had fair shares of bullish runs and bear runs. So it's a mixed performance this week.
Quite a mixed performance, but they have had quite a lot of profit, made from that market with oil traders. But gold and other precious metals took a rebound this week. What is responsible for the uptick in prices for those metals?
Yeah, for the precious metals, particularly gold and silver, we've seen that as investors begin to shy away from the macroeconomic risk in the environment, they are beginning to buy more into precious metal. We also observe that in the U.S. market, a lot of volatility has happened in the equities market. Same has happened across other risk assets because of the current macroeconomic fundamentals stemming from higher inflation, stemming from policy normalization across advanced economies, and a couple of other supply-related factors. The risk in the investment arena has really gone up. So it is just rational for investors to begin to seek investment in safe haven, which is responsible for the slight uptick we're seeing in the commodities, in the energies, in the precious metal market, particularly gold and silver, like you rightly mentioned.
Right, and we know how traders love their safe haven assets. But let's look at the bond market now. The sub-Saharan Euro bond market recorded high sell-offs this week. What do you think caused that?
For that space, right, we observed that the market has been tracking the performance of what's happening in the global equities market, specifically the U.S. market. We understand fully well that because they have the same risk appetite and they have the same risk nature, so we understand that prices tend to follow what's happening globally. And like I mentioned, the U.S. market has suffered heavily from high inflation worries and policy normalization. So we saw the sub-Saharan Euro bond market taking a toll from what's happening in that space. So throughout this week, we saw downtrend in prices, particularly on Nigerian instruments, as investors are beginning to rotate out of risk-weighted assets, like I mentioned, and move into developed market bonds. Because we saw a correction this week. This week, developed market bonds actually moderated in terms of yield, which means price went up. And we could drive that event to the fact that investors are running out of risk-weighted assets like sub-Saharan Euro bond market, and they are tilting or pushing their investment toward a much more stable and safer form of investment, which is why you see bonds market gaining this week in the developed market. And also we see why the precious metals market also gained. So by and large, we've observed that the risk nature is very, very high. And the major risk factors are higher inflation in US, higher inflation in UK, and the fact that the US Fed is also looking at increasing policy rates at a faster rate. We saw that in March and in January, they discussed raising rate by 0.25 and 0.5% respectively. But the US Fed chairman has also put it to the market that the possibility of a 75 basis point increment in yield in benchmark rate is still on the table. And of course, market participants are very, very wary of that, because anytime you see an increase in policy rate in advanced market, it usually takes a toll on many asset classes, particularly fixed income. So the sell-off we're seeing in the sub-Saharan Eurobond market is largely connected to the discussions in the global space.
All right, thank you so much, Babajide Atolagbe, Treasury Analyst, AfriInvest Asset Management. Thanks so much for coming on the program.